Hello, all you lovely people out there. I'm back. It has been a little while. How are you all doing out there? I am Kate Hill, bringing you the best unbiased and honest comment and content on property, along with really awesome hints and tips. Today, stay tuned for all your latest property news. Now, about a decade of knee-jerk government and fiscal policies around property investment have caused Australia's rental crisis. The PIPA chair, Nicola McDougall, and my co-author, says that since 2014, investor lending has been targeted with APRA lending restrictions, negative gearing and capital gains tax laws continually on the chopping block, and emergency tenancy laws enacted during the pandemic. The Real Estate Institute of Queensland CEO says that investors are becoming increasingly frustrated with legislative intervention that effectively limits what they can and can't do. You only have to look at the number of properties that have been transferred from the long-term permanent rental market into short-term letting, as well as the volume that have been sold, to see the frustration in action. CoreLogic Research Director says that the short-term rental supply outlook is pretty glum, with approvals at their lowest levels in more than a decade, and that governments should have a bigger stake in rental home ownership. Adelaide's Osborne shipyard is tipped to transform into one of the world's top defence building precincts on the back of the latest submarines deal. Based in Adelaide's Lefebvre Peninsula, the shipyard is already well known for its innovation and automation technology. To build the proposed nuclear-powered submarines under the deal, the shipyard will triple in size. The federal government has purchased land north of the existing shipyard, where the vessels will actually be built. It's expected about $2 billion are going to be spent on the shipyard in the next 4 years. They say that the project will redefine South Australia's industrial landscape. The submarine building project is predicted to cost between $268 and $368 billion and create 20,000 direct jobs throughout Australia over at least 30 years. It is likely to lead to extra science, technology, engineering and maths courses in South Australian universities as well, and the creation of a shipbuilding academy at Osborne. The property market remains overall in a very strong position despite predictions of a tough year, with prices staying high and houses quickly snapped up in our capital cities. PropTrack's February report shows a rise in housing prices, but fewer new listings compared to last year. Wages growth, higher migration, and competition for more affordable states mean that interest is expected to stay strong. The RBA's April rates decision is likely to influence the market, and buyers and sellers have adopted a wait-and-see attitude as they assess what the impact of the decision will have on their ability to purchase or sell property. It really will be interesting to see how this market moves in the coming months. Regional areas have exhibited a lesser pace of price falls and recorded a negligible 0.01% monthly rise in February, bringing prices down only 0.47%. Comparing annual growth, regional markets have outperformed their capital city counterparts in every state. Although the pace at which net internal migration flows into the regions were occurring through the pandemic period has eased, they remain elevated relative to pre-COVID levels. These population flows, alongside demand for more affordable homes, have provided downside support, resulting in regional areas faring much better than capital city areas, even as housing market conditions have shifted. Cashback offers and financial incentives for new customers have resulted in the Big Four banks taking over top spot in the mortgage refinancing market. Analysis from online conveyancing service PEXA shows the big banks are making it harder for smaller lenders to compete. Head of research says that traditionally it is the smaller lenders who handle the lion's share of refinancing. But what we've seen is the competitive landscape change quite dramatically in the tail end of last year, he says. According to Rate City analysis, there are at least 12 banks that are offering a $4,000 cashback on a $500,000 loan. He says that the volume of new loans has come down, so the big banks are now actively pursuing a share of the refinancing market. The Australian Bureau of Statistics figures show that refinancing is big business, despite a small decline recently. The total value of housing loans refinancing among all the lenders fell 1.5% to $19 billion in December. I will keep you posted on all things property from around Australia. Don't forget to hit that subscribe and that like button if you are enjoying all the free content, and I will see you again really soon. Bye.